my name's Jez Quinn. So I'm sure some of you guys will already know me, some of you won't know me. So it's fantastic to kind of electronically meet you all. I'm head of sales at West One. That covers more specialist end of the business. So it covers bridging, development, and commercial terms. So I look after quite a large team. That all will sell and support you with those products. I want to spend a bit of time talking about the business. So there'll be varying degrees of people on here that know about West One and whatnot. But I want to talk to you about us. I think with recent goings on in the market, it's probably really important now more than ever to delve into the kind of makeup of the businesses, and I think ours is quite an impressive one. So I would like to spend a bit of time talking about it. So West One, we're part of a group called Enra Specialist Finance. So within Enra, there's two brands. There's West One, which is the forward-facing lender arm. That's where I work, and so I'm here to talk to you about in large today. We also have Aria Finance, part of the group, who are commercial brokerage. Again, not something I want to spend much time talking about today, but having them as part of the wider group does help the lender arm in knowing what's important for you guys and when we're designing and building products and criteria sets and things. The group is majority sharehold by a company called Elliott Advisors. Now, Elliott are one of the world's largest hedge funds, multinational, multi-billion pound, tons of diversity in their assets that they have, and they're the majority shareholder in our business. However, what's really, really important, I think, is that we're still operated fully by our management team. So our CEO, Danny Waters, was the founder of Enra. He still chairs our credit committee, makes every single decision regarding the business that's required from him. It's no external influence. And then obviously the management team continue to do it, which means that day to day, our business makes all of its own decisions. Now, that's only important to know when it becomes a problem for you. There are lenders in the market where their majority shareholders who have no day-to-day involvement make some important decisions regarding their business. Doesn't happen with West One. So that's one of the contributing factors why our conversion rates are higher than the market average across products, because when we say we want to do something, we do it. And in our history, which is 20 plus years, there's never been a deal that we've wanted to fund that we've been unable to. Talking about us now, I mean, we've got over 300 staff across two sites. Our head office is in Watford. We now have a kind of satellite office up in Manchester that actually houses our commercial term division, and I'll kind of tell you a bit why about that's located up there shortly. But we've got over 300 staff across the business. We've lent over £10 billion since launch. I mean, we've got 3 billion assets under management. We regularly do over 200 million a month in terms of money out the door. And we do that across 6 products. So we have a residential first charge specialist proposition for owner-occupied mortgages. We do have a buy-to-let division for obviously buy-to-let mortgages, quite big in the second charge space. Bridging is what most people associate us with because that was where we started from. We're the second biggest bridging lender in the country. We've got an extensive development finance proposition that's lent upwards of over £1 billion since inception about 8 years ago. And then the newest addition to our product suite is commercial term, which we launched last year. And it's commercial term what I'm here to major on today. And it's a really exciting product. Now, we launched commercial. The business has been thinking about commercial for some time. I think there was a decision to be made years ago about whether we went with resi or commercial at that time, and we opted to go with resi and get that product established into the market, and then develop a commercial proposition. And as you'll know, if you use West One, we don't do things to just be there to tick a box. West One come in, and we always want to be a top 3 player in the areas where we operate across all products. So with commercial, we felt that the market is considerably underserved, and we felt there was a great opportunity. So the market landscape for commercial, you kind of have got the high street banks who your Lloyds that are been around for a long time. Generally speaking now, like vanilla deals, only get out of bed for big ticket deals. Very, very slow in the main. And that was kind of the commercial market until about 15 years ago, when you had the launch of the challenger banks into the space. Now, the challenger banks popped up to try and solve that problem of speed and the underserved market, and again, many to name and things. But the challenger market came in. Generally speaking, the bank market now are relatively nichey. They've all got their own kind of things that they like to do. They haven't really solved the problem of speed, because we still think that they're far too inflexible and lack agility and lack the speed. I know when we were looking at this, there was examples of where a touch point for underwriting was upwards of over 2 weeks for someone to look. So if you needed to send a bank statement in for them to look at, that goes in day one, they'll look at that in 2 weeks' time. They've got a query on it. They'll come back to you, and then you reply to their query, and they'll look at that in another 2 weeks' time. And it's just for us, we felt there's a great opportunity there for someone to come in with really good service. So you've kind of got this gap of like high street, which are relatively the cheapest pricing. Then you've got the challenger banks that are a bit more expensive. You've got a big gap to the next price point in the market. But if you need things to move quickly, you've got this big bit of wilderness here that no one's really operating in, and that's the area that we wanted to look and fill. And we thought, how best could we do that? So there was a couple of options really that we could have gone down. So West One have done and have certainly done for some time commercial bridging. So we understand commercial properties, the makeup of how it works, underwriting exits, all that sort of stuff. So there was that knowledge already within our business about the market, and what would have been probably easiest for us to do and would have probably been cheapest for us to do would have been to upskill a couple of our underwriters that are familiar with commercial bridging, launch a commercial term proposition off the back of that, and launch that into the market. And we've seen that done with other lenders in the market where they've kind of upskilled the underwriters. And I think what we found is that you end up defaulting to the worst position, and then that becomes the underwrite for everything. So I know lenders where underwriters will underwrite bridging and buy to let, and they underwrite the bridging as if it's a buy to let when it needs to be different. So we didn't want to do that because we felt that might impact our commercial bridging. We didn't think it was the wisest thing to do. So what did we do? Well, we looked to the market. We looked to who can we get in to come and lead this for us? Who's in charge of the best service in the proposition? And we look back to that landscape, and the best service out there, as I said, was Together. There's a fellow that some of you might be familiar with called Duncan Abraham, who was been at Together for 26, 27 years, very senior figure in there, used to run a lot of their underwriting divisions internally. We hired him, and we asked him to come and set up an office for us in Manchester. Clearly they're based up north. Build a team. Clearly, when somebody's been working with a business for such a long time, they'll have some really strong internal relationships. They'll have some really trusted staff that want to move with them, that want to come with them. And Duncan's built a team where we've got a nice mix, actually. We've got a mix of new people with new experience from other lenders and other backgrounds and that are new to the business. But we've got a core of people that Duncan knew and trusted. And I've got a couple of those guys actually that are on the call today, both in Sean and John, who will be around for the Q&A after. But Sean and John were both used to work with Duncan and have now been brought in to us as underwriters in our commercial division. But we brought Duncan in, built the team out. We've got probably now about, I don't know, a dozen to 15 staff up in that Manchester office. We've just actually outgrown the most recent office, so we're going to be taking up a new premises at some point over the next few months up there that really gives us the ability to grow that operation even more up in Manchester. But basically Duncan came in, and you couldn't get a better way of building a product, because what the business has said to Duncan is they've gone, right, Duncan, there's a blank sheet of paper. What I want you to do, I want you to build a commercial proposition for us that is going to be really competitive, that's going to fill the gap in the market where the gaps are, that's going to do it the West One way, which is all about speed, excellence, great service, etc. And that's what we've done. We've got this all-encompassing proposition that we piloted probably last summer. We launched it to the market in October, and it's just been breaking records week on week. And this is the first in the series of webinars that are gonna bring some of our products to life. And we thought no better to talk about one than our commercial proposition. So if you were building a brand new proposition, we're going to solve some of the problems with it straight away. So what are some of the problems that are in the market that I've just alluded to? Well, firstly, there's no real kind of all-encompassing product that covers everything. So we've launched a product that we within our appetite covers everything that we want to lend on. So we're doing semi-commercial and commercial. We're doing investment and owner-occupied. And I've got a good example in a minute coming up where We've got a hybrid of the two. We're doing interest only in repayment. We're doing personal name and limited company. We're doing loans from as little as £50,000. I mean, talk about an underserved area of the market, commercial term, and having minimum loan sizes. Well, West One have launched our proposition with a minimum of 50,000, which is fantastic, going up to 5 million. So we're kind of serving both ends of the spectrum, and that's one for those that are familiar with our bridging proposition and know that. Like we regularly write checks of 10, 15, 20 million plus. It's going to be nice to see how this product evolves over the coming months and years, because we've always been a lender that kind of we're there for the bigger deals as well as the smaller ones. So it'd be interesting to see how that all evolves. Yeah, we're lending in England and Wales. We've got to 75% on a purchase. We'll 70% on a refi. We've got rates, which is the important bit, right? So we've got rates that are starting from 7.29 on pure commercial, 6.64 when it's a semi-commercial product. And one of the nice little key selling points that we've got is we will actually class a product, a security, as semi-commercial rather than pure commercial, as long as 40% of the property is residential. We don't require it to be 50-50. We can work on 40-60. So it means that more fall into that semi-commercial banding, which means that the pricing options are better. We can look at things like first-time buyers. We can look at by referral, foreign nationals and expats, minor credit blips, things like that. So it's a real all-encompassing proposition. The only things that we're not really keen on are kind of like land-related things, so like caravan parks or car park and things where it's essentially a bit of land, pubs, petrol stations, like care homes and schools where we're going to have a reputational issue. Very short list of things that we're not actually going to be that keen on, whereas we've got a massive list of things that we are keen on, and we're doing it, as I said, with rates that are, yeah, they're going to be a little bit more expensive than the challenger banks, but the idea for us is we're going to be doing this far quicker, far easier, and solving that problem of speed. Moving on to kind of like the underwrite. So one of the, I mean, the key selling point with it is speed, right? So one of the things that we're shouting about are the fact that we'll have a 24-hour touch point. So you upload something, or you ask a query, or you send an email in, your underwriter is going to come back to you within 24 hours. I mean, I can vouch for that firsthand, because I've seen. I often sit on calls like this, and I'm involved with firsthand with like a lot of our bridging deals, and we have like I'll spend half an hour on a call, and if I've got a deal that I'm being kept in the loop from by an underwriter, we'll see. And there'll be people on this call that have got first-hand experience of this, where like the underwriter will email you, and then you'll email back, and then the underwriter will email back, and you'll email back, and I'll sometimes come off a half an hour conversation, and there's been 4 or 5 back and forths during that time with the underwriter and the broker to answer questions, to satisfy underwriting requirements, and it's just really quick, and you can't copy your breath how quick it is, because it's like answers coming back in 3 or 4 minutes and stuff. I've seen I've been involved with commercial deals where I've seen that as well. Underwriters jumping on stuff straight away, having these conversations. There is a portal. I said there's no portal. There is a portal. But you don't have to use the portal. If you want to deal with us the old-fashioned way, which is via email, you can do that. It's probably the way that, when you're trying to work stuff at speed, that I would say is the best option anyway. So, but the underwriters are rapid, coming back to you within 24 hours. There's no legacy underwriting issues. There's no, like, because this has been built from scratch. The underwriters have autonomy to underwrite the deals based on their own merits. So they can work on projections. They can work from accountant certificates instead of the formal accounts. They have the ability to be flexible, not dictated to, and not tick box. It's not tick box underwriting. It's real underwriting from really experienced underwriters that know what they're doing, which has resulted in some real fast, stress-free outcomes for borrowers and brokers, which is great. A couple of other highlights that I'd mention while I'm on here, and Sean and John will probably chime in at the end of the call with some, but one of the important things for us is we lend against market value vacant possession. So we're not instituting a 180 day or anything like that on our commercial. So when we're going up to 75% on a purchase, or 70% on a refi, but we're lending against the MV VP rather than the 180 day, you might find that we can actually lend a bit more than what other lenders can, as well, which is a great position to be in, right? It's never an issue. Just probably want to draw a bit of attention to a couple of nice case studies that we've had. So I talked to you there about the fact that we can look at investment and owner occupied. So we recently did a deal where there was a firm in an office block looking after taking over one of the floors, and they were paying £4 a month rent. They had the opportunity to purchase the building, which they did with the aid of a commercial term loan with us, 650 grand. So the deal went through, but the opportunity for them was there was actually 2 other floors that they could rent out. So we could do a hybrid of investment and owner occupied. So they still occupy the first floor, and then they can rent the other 2 floors out. So they purchased it, went through nice and smoothly, waxing lyrical about the stress-free. I mean, I've got a quote written down here. The entire process was straightforward and stress-free, is a note from the borrower by the broker back to us. But they went into there, they rented out the second and third floors of the building, 28 grand a year coming in, which was remarkable for the firm's cash flow. Not only has it now generated that cash flow, but it's also it solidified the long-term future of that business in the premises with no worry about rent increases, and they've also got the opportunity to grow their equity in the fact that they've got a long-term commercial property acquisition that they've now made, which was a really good one. So the fact that we can look at mixed opportunities is good to bring to life. We've got a great opportunity here, a case study where we did something really quick. So again, commercial office. I've got two actually, two ones to talk about. But commercial office, they needed to get this refinanced before the turn of the year. So they'd got an existing loan on there with one of the high street banks, but they'd got a business opportunity in January that they needed the capital for. So they needed to refinance that west and pull some money out really quickly. They did this. It was the 28th of October that we received the application in from the clients, from the broker, and it was the 12th of December when we completed on it. So speed and certainty, getting stuff done quickly. 45-day turnaround there on an office refinance was fantastic. And the other one, even better than that, even quicker, MOT garage. So got a guy, new business venture that he was raising money. He had basically a 4-week turnaround. It was bridging speed that he needed to get the deal done by. Unencumbered, already owned it, but he wanted to pull money out of his MOT garage to fund his new business venture that he was had a new purchase that he had an opportunity to go and buy, but he needed to complete very quickly. We got it done in 4 weeks. So 4 weeks for a commercial term refinance on an asset like an MOT garage, where you've got the underwrite, you've got the valuation, you've got the legals all working in parallel with each other to get stuff delivered. It's yeah, I mean, it's kind of just what we do at West One. I mean, when you're born out of a bridging lender, the saying I like to use, and I mean, it might be a little bit derogatory and stuff, but I talk about some other lenders and I say, yeah, but they're a bank that do bridging. And that kind of, to me, means, well, that's why they're slow, that's why they're inflexible, that's why they're like not very agile. For us at heart, we were a bridging lender, so we are flexible, we're quick. We're all about good service, good turnarounds, fast, agile, flexible. And that DNA is throughout our business across all of our products now, and certainly feel it within our commercial offering, because we're turning things around in 4 weeks. I mean, it's unheard of really to get a deal to complete that quickly on a term deal. I mean, while I talk about bridging and commercial opportunities, obviously it's a great exit for our own deals. You've got a commercial deal that needs a bridge or whatever it is, it's an acquisition that needs to move really, really quickly and you need a bridge on it. We can exit our own deals on commercial term, and you'll save the client quite a lot of money and time and hassle. And we're going to be able to set that up and do a valuation that we can rely on for both products. We can do reductions in legal fees because we'll put the same lawyer on both products with us. The idea is going to be getting off the bridge as soon as you can. And if we can control it all in-house and we can work it all in parallel, it's going to really help you get off that really as quick. I mean, look, in in summary, the point of today is to just give you a little bit of an intro into what we were thinking when we launched, the gap we're trying to fill in the market. As I said, it's all encompassing. So we want to see every single deal. We want to quote on every single deal for you. The guys that you will be familiar with that look after you for bridging from a sales perspective and BDM team, both field and phone, are the guys that are going to look after you for this product. We do have additional resource that are specialists for commercial that we'll refer to and work with. So it's probably going to be, we come out and talk to you about it, be able to answer high level questions and look at deals, but you're going to have a dedicated specialist resource within our Manchester office that's going to be able to get your terms out, going to be able to answer any technical questions and run calculations, do all that sort of stuff for you. So we'll make sure that after this call that they're introduced. We'll make sure that when we come and see you with our wider business hat on, that we're reinforcing the message and talking about this product and doing you the intros over to that team. And yeah, that's it. I mean, I think it's like, why wouldn't you want to start putting West One in the mix for these commercial deals? I'm sat here and I'm telling you that we're gonna do it at a competitive price. We're going to do it at very, very fast speed. We're going to basically be a game-changing offering launching into the market now that completely fills the frustrations that you probably currently have, where you want something done fast, you've got to pay a lot of money for it. We're going to fix that problem for you. So let's start getting some inquiries coming through now. Let me have a wee look at the Q&As, see if we've got any on here yet. Don't have any by the look of it, or maybe we have in the comments. Oh, we do. There's a couple on here, right? So, Sean and John, please join me in having a little look at this. So, I've got the first one here. It says, I have a case he said no to, but I wanted to check. The client's buying a commercial. That's just popped up. Client is buying a commercial unit that is 225,000 and is tenanted with a rent of 15,000 per annum. My client is purchasing with no cash deposit. Instead, he's needing 90 grand on the 140, as the rest of the balance will be paid to the vendor as deferred payments. Vendor will be removed from the deeds and hold no charge that affects security. Also popped up. Or he can get the unit with no money change in hands with the view he raises a remortgage after 6 months. What do you think? I mean, essentially look, I know when we like clients to have skin in the game on our other products, but John, is that going to be the same for you, that the fact that the client's not putting any cash into this on day one is a reason why you've said no, or is it something you can look at?
Yeah, so I remember this inquiry coming through and I reviewed it. The issue was surrounding the deferred payments, which impact affordability quite a lot over the first, however long he's going to defer the payments for. It would take it outside our usual affordability criteria, and you'd have to then take into consideration their all their income, which is an issue. So ideally, with this being a rental property, you want it to be self-funding, and it wasn't going to self-fund based on the deferred payments as well for that 12 months.
Okay, all right, thank you, John. There you go. John's the guy that looked at it originally, so happy days. Right, morning. I missed a bit unacceptable property types. Would you lend on licensed premises, for example, a Londis or a NISA, etc.? I think the answer to that's no problem, as long as the numbers work. Am I right, boys?
Yeah, we've lent on quite a few of those type of properties, and they're bread and butter in our eyes. They've got a good steady income, so happy to lend on those type of premises.
Fantastic. Right, just gone into the chat. So, Lily, we have a question from you. Do you lend on hotels in Edinburgh? We only lend in England and Wales at present for commercial. However, watch this space, because, as I say, it's a new product in its infancy. So we are making tweaks as we go, and we currently lend in bridging in Scotland. We lend in resi and buy-to-let in Scotland. So no doubt that will be high up on the agenda to get us to be added. So if you make sure that you're registered for the marketing updates and whatnot, then we'll speak to you. DSC requirements, adverse Airbnb first time at proc fees. Right. Do these in order. Right. Proc fees 1.5% on every single deal. First time buyers are fine. Adverse is case by case. Look, if you've got a story Do we want someone that's got, like, have we got, I mentioned some lenders earlier, right? I mentioned a lender that sits kind of at this end of the market that's quite expensive. They probably have a big appetite for adverse. We certainly don't. We want our clients to be clean. If there is a small bit of light adverse that's down to a life event and you can explain it, we can take a view. What we've set up here is like a referral proposition whereby we'll come back to you really quickly. And again, the point with us is we're comfortable, as I'm about to tell Chris, who's asked me if we lend on children's nurseries, we're comfortable saying no really quickly, and that won't be one for us, Chris, because we don't lend on children's nurseries. Won't be a good look if we had to go in and repossess that and boot out a load of children. But we're comfortable saying no. We love to say yes, but you can refer it to us and we'll come back to you same day, probably more likely within a couple of hours, to say, yeah, it's for us, no, it's not, or this is what we need to make a decision. The DSC requirement. So, John, do you want to just cover this so make sure I don't make a hash of it? Because it obviously differs between whether it's owner occupied or investment led, and then it differs whether it's personal name or limited company. Or either tried. It's what if it's investment led, you're what, 120%. If it's limited company, 130. If it's owner occupied, if it's personal name.
So yeah, 130 personal, 120 limited company.
And then it's the TSDI, isn't it? If it's owner occupied. Do you want to just give a quick run through about how that works?
Yeah. So TSDI, what we do is we take into consideration the client's total income and also their secured debt. So there are ways around it. We usually aim to do 50% TSDI, total secure debt to income ratio. If the client does have multiple buy-to-lets, and that can be evidenced in the way of an SA302 or an accountant certificate, we can exclude them. We might just include the client's personal mortgage into that. And we will take into consideration all their income. So if it's their trading income, and if they are taking a dividend and a small salary, we will use all that income to get to our total secure debt to income ratio. If it is like, usually we work on a 50%, we can go up to 60, but it depends on the application. So what we'll do is we'll review it at that time and see where we can get comfortable. If it is something we can get comfortable at 60%, usually on your capital repayment we can. Interest only, like I say, it'd be a case by case basis where it'll be reviewed, and we can let you know where we can kind of get comfortable with it to try and help the deal.
Thanks, John. We've got one here from Vulcan, who I can vouch for, probably being one of the hardest working brokers in the industry, with his late night LinkedIn updates on his deals that he's getting through very, very quickly. He says he needs to submit a trading from premises today to pay off an existing bridging loan. What's the first step? Well, look, the first step, Vulcan, is going to be, we'll reach out as soon as this is done, and we'll get the info and we'll get some terms over today, and we can get the ball rolling on it. So happy days. BMVs, below market values. John, do you want to cover what our approach is to on commercial when someone's got the opportunity to cover or to purchase a property that's below market value?
Yeah, so we do consider below market value. We're always asked the question, the reasons surrounding it. It could be they're a long-standing tenant, and the landlord wants a quick sale, or happy for that tenant to take over. We'll base our lending on the purchase price. For instance, if it was valued at 300, but they're buying for 250, we'll go 75% on the 250,000.
Fantastic. I'm just reading through some of these other questions. Michael asks, why don't we lend on petrol stations? Now, I know, I mean, we say, right, in bridging that we don't lend on petrol stations, but I've done one, and have done it because the shop element was quite a substantial part of it. The LTV was peanuts. I mean, from a commercial term perspective, John or Sean, is there any leeway on that whatsoever if the deal was a no-brainer, or is there a specific reason why petrol stations aren't considered suitable security? Clearly, they're quite niche.
Yeah, I think it's surrounding there's obviously potential for contamination, land. Also, the drums beneath. There's a lot of things to consider. It's if we were to repossess, it's quite hard and expensive to have that conversion into another usage really. So it's not something we want to get into at this stage, just due to the nature surrounding them. Like I say, there's a number of factors. The contamination of land and the drums below. It can be quite expensive.
Fantastic. All right, thanks, John. So there you go, Michael. That's why. But again, this is going to be an evolving proposition, so keep an eye on it. Query on holiday lodges on a Haven site. So again, this comes back into kind of what I said. It's almost like a caravan site, right? So you're putting lodges down that can be picked up and lifted down. It's a land. Is the security effectively? There's no permanent structures on there, so not one for us at the moment. But again, we'll see how the proposition develops over the coming years. But let's get back into the Q&A section, because I know there was a couple under here. We're mixing between Q&A and the chat as well as I can. One from Daniel, right? Applicant looking to buy a vacant bingo hall with planning permission to conversion to a gym for 700,000. Applicants are experienced landlords and will procure a tenant at approximately 70 grand per annum, offering the incoming tenant 12 months rent free to allow the tenant to complete the renovations, and therefore looking for a 12-month retained and 6-month serviced. Applicant will offer first charge over buy-to-let value at 1/7, second charge over the main res. Exit will be a refinance. Well, sounds something like that's a bridge, right? I'll pick that one up after. I mean, in theory, with that security, it looks like it'd be one that will be absolutely fine for us. So I'll pick that one up in a moment. Don't want to take the spotlight off our commercial term proposition, which is what we're here for today. But I'm going to make a note of your name, Daniel, and then I'll pick that one up afterwards. Right. So I think that's all the questions that we've had that are addressed. Right. So just had to see one more chat go in. PBSA loan to value. Do you have any restrictions there, Sean or John, if you were to, like, if it was lending on a purpose-built student accommodation?
No, student accommodations where we can, we'll assess the security, but we'll potentially go up to your 75% on a purchase and 70% on your refinance. Good
stuff. All right, thank you. Guys, listen, a couple of things. I just want to thank everyone for the time. Like, really appreciate it. I mean, done these webinars over the years, and we end up having, like, you start off with, I don't know, it's probably saying more about me than it is about anyone else, but you start off with loads of people on the call, and you end up, and there's hardly anyone left, and you're almost talking to yourself. But we've held viewership here remarkably well. So thank you for your attention. It is noted and it is appreciated. But secondly, guys, if anyone's wants to find out a bit more, wants to pick up anything separately, the guys can set up calls. We can come and see you. We can set up a Teams call. We can set up a Teams call with one of the commercial guys on there, and do all that sort of stuff. And we can crack on from there. Lucy's just chucked one last one in saying, what sourcing engine are you on? For commercial, we just launched on Brickflow for commercial, I believe. Don't think it would come up on any other sourcing systems, would it? It's going to be about your own research and knowledge, isn't it? Is that right, John?
Yeah, we do have Brickflow at the moment, and a lot of the inquiries just come through the commercial term email box.
Fantastic, and thanks, John, for picking up that message there with Vulcan. But guys, look, thanks for your time. I appreciate it. I'll hopefully catch up with you all soon. We'll follow this up appropriately, and if you need anything else, give us a shout. Thank you.